We now need to add to our worksheet a schedule for the amortization of our right-of-use asset. So let's do that now. Let's separate this for clarity. So I'm just going to give this column here a dark gray background. And we'll just shrink this a little bit. Okay, now this schedule will be much simpler than our lease liability schedule. We only need 3 columns. So let's copy over this header, and we'll call this ROU asset schedule. Then we'll label the columns opening balance, amortization, and ending balance. And we'll just copy this formatting over from column O. Now the opening balance on the commencement date will be our total opening ROU asset. So we'll just link back to that here. Since this is the commencement date, we don't have any amortization. So we'll hard code this just like we did the interest. And then our ending balance will simply be our opening balance less the amortization during the period. Now, since this is a finance lease, we'll amortize the right-of-use asset on a straight line basis, similar to how we would depreciate other property, plant, and equipment. We amortize it over the lease term unless the asset's useful life is shorter than the lease term, or unless we are reasonably certain we'll purchase the asset before the end of the lease. We already worked through this analysis during our classification. The useful life of the equipment is at least 7 years, and the lease contains no purchase option. So we'll amortize the asset straight line over the lease term. So over in our ROU asset section, we need to add a line for monthly amortization. And this calculation will simply be the total opening ROU asset divided by our lease term of 36 months. Now back in our ROU asset schedule, for this next period, the opening balance will simply be the ending balance from the period prior. Our amortization will simply be our monthly amortization we just calculated, and we'll lock that cell. And our ending balance will be our opening balance less our amortization. Then we can copy these formulas down to the end of our lease term. And let's add a total line for our amortization. And there we confirm that it equals our opening balance. And you can see our ROU asset is being amortized to 0 by the end of the lease term. And at this point, we now have enough information to perform our subsequent accounting. We know the interest expense, the liability reduction, and the amortization of our right-of-use asset. But before we finish, we'll add one more section to our schedule, which will track the cumulative cash payments and total cumulative expense we've recognized for this lease as of each reporting date. So we'll again separate this for visual clarity. Copy over a header, and for this we only need 2 columns. We'll call this lease expense schedule. Let's copy over the formatting. And now this first column will be cumulative cash payments, and the second cumulative lease expense. For the cumulative cash payments in this commencement date period, we want this to include all the cash payments we've made in connection with the lease prior to or on the commencement date. And we already have that information over here in our ROU asset section. So for this opening cumulative cash payments, we'll simply say equals and add together the prepayments to the lessor and our initial direct costs. Then for our cumulative lease expense, this is 0 as of the commencement date. We haven't yet recorded any expense through our P&L. So we'll hardcode that to 0 just like our interest and amortization. Then beginning with our first reporting period as of December 31st, 2025, we want our cumulative cash payments to equal the cumulative payments from the period prior, plus any payment that was made during the period. And we'll find that payment over here in column H. And for our cumulative lease expense, we want our cumulative lease expense from the prior period, plus our interest expense, plus our amortization expense. The 2 items that will flow through our P&L for this finance lease. And now if we copy this down, and what you'll notice by the end of the lease term is that the total cash payments we make in connection with the lease and the total expense we recognize through our P&L over the lease term are the same, $207,900. And for this lease, this is exactly what we expect. There could be situations where this is not the case, specifically if we were to presume ownership of the asset at the end of the term. and we're depreciating it over the useful life of the asset instead of the lease term. And we'll look at that situation in a future lease. But for now, let's add a check to our worksheet to ensure that we are indeed expensing the total amount of our cash payments. So we'll add one more section over on the left here, and we'll call this check. And what we want to do is confirm that the total P&L impact equals our cumulative cash payments. So let's add a line for our lease expense, which for a finance lease is both our interest and amortization, and we'll link this to our cumulative lease expense as of the end of the lease. Then just a bit of foreshadowing here, we'll leave a few placeholder rows for other items we may see in the future that impact our P&L. And then we'll sum up our total P&L impact. And we'll bold this line and add a top border. Then we want to add our total cash payments, which we'll grab from the cumulative cash payments as of our final period. And we'll bold this as well, and then add a check to ensure that those two figures equal each other. So we'll round each of these to 2 decimal places just to avoid any quirky Excel rounding issues, and simply say the total P&L impact equals the total cash payments. Then the last thing, we'll just add some conditional formatting here. So if true, we want a green fill with green text, and if false, we want the red fill with red text. And great, you can now see on our worksheet we have the lease liability schedule, we have the ROU asset schedule, and our lease expense schedule over the life of the lease. Before we go, the last thing we'll do is just add our subheading here as the lease name. So we'll use an X lookup here. We want to look up this 1.0 identifier. We'll look that up in the identifier column of our lease list. We'll look for our lease name. If not found, we'll just leave a blank cell. The match mode will be exact. And we'll search first to last. And with that, our lease schedule is complete, and we're fully set up to track everything we need for both the initial measurement and all the subsequent accounting. And speaking of subsequent accounting, we'll tackle that in the next episode.